Hello everybody, this is your boy is back here, and guys, welcome to another interesting session. Guys, in this video, right, brace yourself because I will pour out every secret that you guys, especially beginner traders, you need to know as to how to build your own forex strategy. All right, because it's important to understand some key factors. All right, I'll give you 5 yardsticks, but that will help you to build this strategy, right? A very formidable strategy. But I was talking about it's important to understand some key factors, especially why do you need a forex strategy as a forex trader? All right, then once you have the strategy, what do you do with it? All right, to know and to vet it, to come to the point of ascertain where you know that yes, this is it and I can stick with it. All right, guys, this is the right video for you if you're a new beginner and you're looking for how to build your own forex strategy. Okay, so stick to the end of the video, and guys, trust me, you will get a lot of value. All right, as I always deliver, today too I will give it to you as well. Okay, so let's jump right into it. Okay, so guys, the question is, why do we need a forex strategy? All right, I think it's quite obvious. All right, if it is not, well, then I'll present it to you. All right, guys, we need a forex strategy because, guys, listen, if you don't have a forex strategy, guys, you won't last long in the forex industry. One, secondly, you won't even know your way out through the charts. All right, through the market, you won't know your way out. All right. 3, having a forex strategy, okay, it's like you not trading as a gambler. All right, so in essence, if you don't have a forex strategy, it's like, you know, it's like gambling. You understand me? But a forex strategy will keep you right on check, because, guys, one thing you need to understand is that trading comes with loss and win. All right, you can't trade without loss. Okay, it's like the water and the wet. You can't have the water without the wet. All right, so when you have the wet, you definitely have the water. Okay, so that is how trading is. Okay, so that is why you need a trading strategy. The other thing that you might ask yourself is, can I use someone else's trading strategy, or do I have to get my own trading strategy? All right, now this comes with a pro and a cons. All right, if you go with someone's strategy, one, the strategy has already been planned out. Okay, it has already probably been tested out, so you don't have to do the hassle of trying to understand how it works. You don't have to go through the hassle of building it. All right, then vetting it as to if it is a good one and it is based on a proper market structure and it will take you on the long run, right? So that is one thing with when you go with a strategy that someone has already built and it is given to you. All right, another advantages with going with the strategies that someone has already built is that, you know, it comes with all the criteria that you need. All right, another advantage with going with someone's strategy is that, guys, it shortens your learning curve. All right, very, very, very important, because as I told you, if you are trying to construct, to build your own strategy, guys, it takes time. It takes time. You understand me? And you know, sometimes if you don't watch out, maybe you can even lose out. You understand me? So that is why sometimes you want to already opt for something that is already outside. Okay, and most of the times, let me say 70 to 85% of the time, most of the strategies that we will, you know, you will personally cave out, most of the times, a lot of these strategies, the foundations of them are already out as a form of strategy. All right, so sometimes you will just have to pick one of these strategies and just fine-tune them. All right, the disadvantage of going with someone's strategy, the disadvantage with going with someone's strategy is that it's not your strategy. So you can't just be going out there and saying that, hey, listen, I made this. It's not yours. You copied it from someone. All right, so you better give credit to the person you got the strategy from and respect him for the hustle and for the job that and the favor that he did you. All right, so that is this disadvantage. You can't claim it as your own strategy. All right, you can do some fine tuning, but to customize it to yourself. All right, to make it more personal to you. But at the end of the day, it is someone's strategy. Okay, so now let's look at the other extreme, which is you building your strategy. Okay, so let's look at the advantage. All right, the advantage is that it broadens your understanding. It will make you learn, and you will go through everything that you need to go through in the forex journey to understand forex trading in its deepest form and to come out with this your strategy. That's one of the advantages with you bringing out your own strategy. Okay, so at the end of the day, you come out very strong, okay, with a strong knowledge in forex trading. Okay, now the second advantage in building your own strategy is that it's your own. As I said, it's your own. All right, so you can do whatever thing that you want to do with that strategy. Call it your own because it's your own. All right, and nobody can say that, hey, you learned it from him or from someone else. So if you even want to monetize it, put it in a course or do something like that, sure, you can do that. All right, so that's the advantage in you taking the time to come out with your own trading strategy. Okay, the third advantage with coming out with your trading strategy is it is something that it is personal to you, so you understand it. Because a lot of times, a lot of new traders are going around looking for, oh man, I want this strategy, I want to learn this strategy. As long as they see that someone is making money with it, they want to go for that strategy. But ladies and gentlemen, it doesn't work like that. It does not work like that. All right, the fact that someone is making money with a certain strategy doesn't mean it will suit you. Because in trading, as if you are quite informed, you will know that trading reveals a lot of who you are. Do you understand me? So if you're a greedy person, the market will reveal it to you. If you're a conservative person, the market will reveal it to you very clearly. If you're a risky person, the market will reveal it to you. All right, so what am I going with this point that I just came in with? The understanding behind the point that I'm trying to give to you is, if you go for a strategy that even though the person who is using it is making money with it, all right, and this strategy is very, very risky, and you are a conservative person, all right, you don't like risking much, bro, man, you at the end of the day, you won't be able to use the strategy, because every time that you will make an attempt to go in the market, your psychology will be backing you off. Your psychology will be telling you to back off. Your psychology won't allow you won't be at peace with what you're trying to do. As much as it's a risk, and taking that risk could potentially change your trading account, but at the same time, you are not at peace with it. Why? Because it doesn't fit your personality, you see. So that is why it's important that you taking the time to build your own strategy is a good thing. Why? Because it fits your persona, it fits you, and it well describes you. You understand me? Obviously, as the time goes on, you can fine-tune certain things, because every day in the market is a new lesson. Do you understand me? So as you trade, as you use your strategy, you trade it more and more, and you use it in the market, with time you will master it, and you just do some little tweaks here and there. All right, now the disadvantage with building your own strategy is, guys, it will take you an endless amount of time. All right, if you don't find a person to help you out, guys, it is difficult. All right, well, depending on your background, certain information that you have, your present situation, and all these kind of things. You understand me? So there are some factors that come in place as to determine how difficult and complex the whole journey is going to be. All right, let me give you a simple example. A simple example could be, maybe let's say you just get exposed to forex trading and you find this thing so fascinating, and you are a father. All right, you have a kid, or you have two kids. All right, So, you here are you, in your Forex journey, you're a newbie. Now you want to find your own strategy, and the kids are crying left and right. They are moving around from pillar to post, and you have to cater for them. You need to go out and get the diapers and all of these kind of things. You need to go to work. So I hope you're understanding what I'm trying to pass out to you. You understand me? So that is why sometimes going for someone's strategy has its advantage. All right. But if, as I said before, if you can build your own strategy, guys, you are good to go. Okay. So now, guys, let's move to the next point of this video, okay, which is the strategy yardstick, or the metric that I'm going to give you, the 5 metric that I'm going to give you. Question is, why do we need this 5 metric? Okay, guys, we need this 5 metric. Now, before I keep on with this, okay, guys, if there is a point that maybe I didn't include in talking about the disadvantage and in the advantages, then guys, make sure to put it in the comment section. All right. Or if there is something that maybe it wasn't that much clear and you want me to throw more light on, feel free to put it in the comment section. Or if you want me to do another video to get into a deeper session of a certain topic, also make sure to put it in the comment section as well. Okay, now let's keep on moving. Okay, so guys, why do we need this 5 metric, which is the purposes of this video? All right, it is the core of this video for you guys to build any good strategy. All right, guys, you need this 5 metric. Okay, so whether you are getting a strategy from someone else, or you are building your own strategy, guys, with this 5 yardstick, you can vet if the strategy is a trusting one that you can go with, or you can decide to abort it. All right, because on YouTube there is a variety of forex strategies. So the question now becomes, which one is good for me? Like, bro, which one can I use? Okay, so guys, with this 5 metric that I'll give you, you will know how to decide and know which one is good and which one works for you. All right, good. Having said that, guys, let's jump right straight into discovering what are these 5 yardsticks. All right, I want you to bear with me, okay, and follow me through, because once I finish giving you all these inputs, all right, I will take you to the charts and I will show you how to apply these principles and how to construct a strategy. I won't build a strategy for you, but I will show you how you can apply this concept, these 5 metrics, okay, as to when you are vetting a strategy and as to when you are building your own of a strategy. Okay, so guys, let's begin. Okay, so in this 5 yardstick, okay, we have 5 points that we need, which is very, very important. The first one is, guys, every strategy must have an entry. Begin to write these things down. Every strategy must have an entry. Why is an entry important, and what entry am I talking about? I'm talking about the entry that allows you to jump into the market, because guess what, guys, no matter how profitable your strategy is, if you never go into the market, if you never press buy or sell, bro, man, you are not making no money. It is all true in your head. You are making the money in your head, but not in reality. You see, because you are not entering into the market. Okay, so no matter how good or no matter how bad your strategy is, unless you enter into the market, that is when the market will show you with time that if your strategy is good or if your strategy is bad. Okay, so that is the first thing we need. Okay, we need an entry. Our strategy must have an entry, something that when they come together or when it clicks or when it shows forth, I know that this is the time for me to enter. So I either press buy or I either press sell and I jump into the market. The second thing that we need in our strategy, in building our strategy is the strategy must have an exit. All right, because you don't go in the market, you don't jump into the market in January and get out in December. Bro, man, the way the market will mess up your life, the way that the market will mess up your life, you will regret it. All right, so you don't go into the market to sleep. You don't go into the market on holidays. Bro, the market don't like you. Put that in your mind. All right, but as much as the market don't like you, if you're a wise trader, you will make a lot of money out of the market. Okay, so we want to find a way to enter into the market, which is our first point. But once we get into the market, we also want a way to come out of the market. Because guys, as long as you are still in the market, whatever money you've made or whatever money you've lost is still not relevant. It's still not part of your balance. It is still not official. Anything can change. All right, and it will only change the moment you exit the market, or to be more precise, you exit the trade. So if you are making a lot of money and you don't know when to exit, your money can potentially grow and grow and grow and grow and grow and grow as much as it can grow, as much as the market will take you in your direction and make you make more money. Okay, it will shock you. It will shock you that there is a lot of people that when they are making money, they don't know, and they begin to freak out, and they're like, oh my God, should I exit or should I stay in? Probably a lot of you have had that experience before. You understand me? Either on a winning trade or either on a losing trade. Do you understand me? So guys, a lot of these incidents is because it's either you are unprofessional, it's either you don't have a proper strategy that tells you that, hey, this is the time to exit. Because a lot of those things are born out of greed. If you understand me. And a lot of those things are born out of, I'm waiting for the market to get into my direction, and they keep on, widening their loss. Okay, so your strategy must have an exit. All right, what are the indices that when they come together, you know that this is the time that I gotta get out of the market? All right, what are those indices? Okay, so that is what comes together. Those are the things that compose your exit. All right, and when you see them, don't think twice. All right, get out of the market. Whether it is a win or it is a lose, get out of the market, because you will understand, as I explained to you, you will understand a certain point which I will reveal to you later, and it is necessary. Okay, so guys, let's move on with the third point in this yardstick. The third point in this yardstick, or in building your Forex trading strategy, or whatever trading strategy, is your strategy must have a winning logic, not a losing logic. You didn't come into trading to lose money. You came to make money. So whatever thing that you are using to make money must give you some sense of a winning logic. It must give you some winning logic basic. What is the basic of this strategy? What is this strategy logically telling me? What is the winning rate behind this strategy? Can this strategy make me money? That's the question you need to ask yourself. Okay, so that is what the whole third point entails. Okay, can this strategy makes me money? Then you sit down and you answer yourself. Then you begin to see the reason why this strategy can make you money. So once you are able to see that this strategy can make you money, and you are convinced of it, then bro, it's a good one. You understand me? Because guess what? In the Forex market, anything can make you money. Yes, but the different strategies that exist in the market, there are those that goes in the market and make this small amount of money, profit, but they compound it over the time and they make a huge number of these steps and they make a lot of money. There are those that goes into the market once and they go for this amount of profit, and that is all, and they make a lot of money. So in the trading industry, whatever strategy you come out with can give you, as long as it has an edge. That is what I mean by a winning logic. All right, as long as it has an edge, it can make you money. All right, but then we will have to add it, or everything that we've talked about, we will have to add it to the fourth point, guys, which is your strategy, guys, must have a risk management plan. If your strategy doesn't have a risk management, it's like you gambling. Okay, it's like going to the casino and gambling. All right, and guess what? The market is an ocean. You can't put enough water inside to make it big. No, you can't fill the market. And you on the other hand too, you can't dry up the market, meaning you can't finish any money inside. So question becomes, when you jump into the ocean, what are you looking for? What is the component of your strategy? What are your reasons why you jump into the ocean? Because if you don't have a good reason, a compelling reason, logic for why you jump into the ocean, then the ocean will eat you up. All right, so it is important that we have a risk management plan. Now, why are we talking about risk management plan? We talk about risk management plan because in trading, you afford what you can risk to lose. All right, because as I told you earlier on, trading is like having the wet and water. You can't take the wet out of water. Okay, so you can't take loss out of trading. All right, you will always lose in trading. Okay, regardless how advantageous or how good, profitable, formidable your strategy is, it will come a time that you will lose. All right, so question is, during those lost moments or during those losing moments, okay, if your risk management, if your financial plan, your trading financial plan is not on check, that is where you can wipe off everything that you lost. All right, now I'm not here to talk about the subject of risk management because it is a whole chapter on its own. Do you understand me? It is a whole book on its own. All right, risk management. I've done a video on that which I call it Risk Management 1.0. All right, and guys, if you want to know more about risk management subject, put it in the comment section. Okay, so what I'm basically saying is that your strategy must have a risk management, meaning how much are you risking per each trade? All right, I'm just giving you a brief idea of what it could be, but it is way above this brief, okay, this summary that I'm giving you. All right, so when you enter into the trade, how much are you risking? How much is your capital? All right, when you go into the trade, how much are you making as a profit? All right, and how much do you intend trading every week? Do you understand me? Or how many times do you intend trading generally? Okay, so there is a lot that comes in the risk management. Okay, so make sure you get a very, very strong risk management concept, okay, so that you can attach it to your strategy. Okay, having said that, guys, let's look at the fifth point. The fifth point is called stickability, meaning stick with the strategy. A lot of newbies have a cycle problem in trading, which is when they start using a strategy and they see that, oh, the strategy was making me money. For 1 week, it did make me money. Then from the subsequent week, it started to lose. Then they freak out and they be like, oh man, is this strategy going to work? No, I don't think this strategy is good. No, let me go and look for another strategy. Then they jump then they jump to go and look for another strategy. Now the reason why I laugh is because I listened to I was listening to a trader, a very good successful trader, and he's called Indigo Mezelab, and he said a lot of new a lot of new traders prostitute strategy. And he says something to that degree, all right? They are strategy prostitute or something like that. And I was like, oh my, okay. So don't prostitute strategies. All right. Make sure you stick with one strategy, all right? So question becomes, if I'm sticking with one strategy, then for how long do I have to stick with this strategy, all right? You can stick with this strategy you can test it for, let's say for a month. 1 month is even small. A minimum, you need to test your strategy for 3 months, all right? A solid, continuous 3 months. That is when you can decide, after that 3 months, that is where you can decide if if the strategy is profitable or if it is not profitable. Guys, bear in mind, during the period of testing it, you need to write every trade down. You need to execute everything with precision. You need to respect your risk management plan. Not that today I'm risking $5, tomorrow I want to risk $20 because I see a beautiful trade, then you jump in and you lose and it's going to be chaos, all right? Consistency and self-discipline is a key in trading, all right? In trading. And all of these things falls in the compartment of the trading psychology, all right? Not the risk compartment, okay? It all falls into the psychology of trading. You need to discipline yourself, all right? So guys, these are the 5 yardstick, all right? The 5 yardstick for building a good and a formidable forex trading strategy is have an entry. Your strategy must have an entry. Your strategy must have an exit. Your strategy must have a winning logic, and your strategy must have a risk plan, all right? And lastly, stickability. Stick with your strategy, all right? Even when sometimes you are losing, or even if it is giving you some losing strikes, guys, stick with it. That is why initially we recommend always to start with a paper account, all right, which is a demo account. Okay, now that we have this 5 metric, okay, I will take you to the chart, okay, and I will show you how to apply this concept on different indicators or without indicators, so that you will know how this process works, okay? And even if you want to use it on someone else's strategy as well, you will know how to go about it, all right? So guys, if you're ready and excited like I am, let's go right on my desktop, all right? But before we do that, if you've watched the video to this point, this is the point. You need to click the like and the subscribe button, and throw me a comment in the comment section that you like it, all right? Okay, so guys, let's start first with this strategy, okay? Look at this. If you are trading the naked market, all right, and you are trading the trend, all right, so you tell yourself, all right, I jump into the market when market structure is broken, all right? So you say, this is when I jump into the market, all right? So you are in the market and you ask yourself, when do I exit? You will say, okay, I exit when I get the number of pips that I need, all right? Or maybe when market hits a previous zone, all right? As you can see, market got into this area, all right? So you tell yourself, when market gets into a previous zone, I exit, all right? So you ask yourself the question, has this thing repeat itself? Okay, now we find the first point and the second point. The first point is entry. So you see, this is where we enter. Second point, exit. This is where we exit, all right? Third point, does this have a winning logic? Yes. I mean, we entered in here, we exit here. The market, you know, the market always goes down and go up. So when it came up here, we said that when it gets into a previous zone, then we exit. All right. So we ask ourselves the question, has this ever happened before in the past? Now, this is where you do what we call back testing. All right. This is where you do what we call back testing. Okay. So you will go back in time on this pair and on different pairs and go and verify. All right. And go and verify to see how many times this kind of thing happen. All right. So an example could be here. All right. Just a small example. See here. All right. Market came back to the previous zone. All right. Market came back to the previous zone. This is not the perfect example. All right. But to let you know that market does retest the previous zone. All right. Good. So that is the idea. All right. Now we are not going into specifics. All right. Obviously, there are a lot of factors that we have to look into, but not in this video. All right. But just to let you know the idea of the winning logic. Okay. Let's go to another pair and see a strategy maybe with an indicator. All right. So let's say this one here, which, okay. So if you say, okay, when the indicator, the stochastic indicator crosses, and whenever time that the RSI touches the 30, okay, then you jump into the market. So look, and you ask yourself, when do you exit? You exit when this stochastic crosses itself back again. So let's see if it gave me money. All right, if I use this, okay, so I would have jumped into the market here. All right, and I would have exited the market here. Okay, I would have exited the market here. Okay, I would have exited the market here. Okay, so I jumped in here and I exit here. Okay, so you ask yourself the question, did I make money? Yes, I made money with this strategy. Okay, so you ask yourself, can I replicate this same strategy? That is where you need to go back and do what we call back testing. All right, so you go back in time, go and look for areas whereby we touch here and the market touch here as well. You see here, you see another one, you see we touch here, we got in here. Okay, we got in here, and boom, you would have exit here. Probably you would have made some small money. Okay, so it's the same thing. Look at here too as well. You see market touch here. Okay, on the market touch here. Okay, we crossed the RSI. Sorry, the RSI touched the 70 zone. All right, and eventually the stochastic crossed down. Okay, so that is where you enter into the market. So probably around this area. Okay, so we enter into the market in that area, and see here, you see this is where the stochastic crossed back up again. So we would have exit here. You see, we would have exit here. So we jump in, we got into the market here, and we exit here. All right, so that is another example. So that is what you have to do. That is what we mean by back testing a strategy. All right, then you do it on USD JPY, then you try it on GBP USD. You understand me? Because sometimes some strategies works best on one currency pair than the other. All right, so it's very, very important to know this as well. Okay, especially when you get to know the currency pair. All right, so let's keep moving. All right, let's see. I think this will be the last example. All right, because I don't want the video to be too long. Okay, so look at here as well. Okay, we enter into the market here. Okay, so let's say we have the 20 moving average. Okay, we have the 20 moving average and the 50 moving average. Okay, so we say when they cross themselves, okay, then we jump into the market. All right, now guys, don't take this as a final strategy. All right, I'm just showing you how you can apply it. All right, because if we are going to use it as a real strategy, then there are some other key factors that we need to consider. all right, before using it or considering it as a trading strategy. Okay, so we jump into when these two cross. Okay, that is where, when the 20 crosses the 50, that is where we enter into the market. All right, so we enter into the market here. All right, and we ask ourselves, when do we exit? We say we exit when the 20 crosses the 50 again. Have you seen the 20 crossing the 50? Yes, here is it. You see, this is where the 20 crossed it. Okay, so this is where you exit. All right, you exit the market here. You ask yourself the question, did they give you money? Yes. All right, so question is, will it always work? No. So you need to, that's why you always need to back test. All right, another question is, did it give you the exit? Yes, because this is where we exit when the 20 crosses back the 50 again. All right, that is where we exit. Okay, so we've seen the entry, the exit, the winning logic. Yes, it has a winning logic because it follows the trend. Do you understand me? It follows the trend. This one that we looked at has a winning logic because it follows, especially when you're trading a currency pair that have a correlation between themselves. All right, so yes, reversal markets, this works very well. Okay, so yes, you can apply the same thing to the stochastic indicator, depending on how you use it. All right, whether breakouts or whether reversals. Okay, so example, if it is reversals, then once we break out the Bollinger Band, you want to look for candlestick patterns that will bring you in. Then entry, this is where you enter into the market. All right, and you exit once maybe you make a risk to reward 1:1. Okay, you see, same thing here. Then it got outside of the Bollinger Band. All right, so you put your stop loss here and you go for the same amount of profits. That's what we call a risk to reward 1:1. All right, all of these things falls into your risk management, okay, plan. Okay, so guys, once you are able to build your strategy like this, then you want to go to the last part of this process, which is back testing it and forward testing it. What is back testing and what is forward testing? Back testing is going back in time, all right, to see how many times this strategy proved itself to be working. All right, that's what we call back testing. And what is forward testing? Forward testing is testing it on real life market. Okay, so now if I was supposed to apply my strategy here, I would have jumped in here. All right, I would have jumped in here and my stop loss would have been here, okay, at 20 pips, okay, or let's say 21 pips, okay, 21 pips, and let's see if we got 21 pips. You see, risk to reward 1:1. You see, on live market, if I came in yesterday, I would have made money with this strategy. You see, if I saw it, I would have made money with this strategy. Okay, so guys, it is very, very, very important. Okay, so it's very, very important that you do your back testing and your forward testing. All right, that will show you with the forward testing, that is where you will know after 3 months if your strategy is good and you can keep on with it, and know that over the time, over some period of years, months, it will give you more money. All right, or not. Okay, it is the forex testing that will tell you that. Okay, so if I came into the market at this point, I won't trade. I won't rush into the market. Why won't I trade? I won't trade because I have not seen any breakout of the Bollinger Band. I've not seen any breakout, so I don't trade. Okay, so guys, it's important, okay, to do your back testing and your forward testing. Guys, if anything was not clear in this video, please let me know in the comment section and I'll be more than glad to help you guys to understand. If I left anything out and you guys think it's a must, then please put it in the comment section. It might be a help to me or it might be a help to some other person. All right, guys, having said this, if you watch the video to this point, then make sure you leave a big like on the video. All right, I thank you very much, guys, for your time. And guess what? share this video, subscribe to the channel for more valuable content like this, and I will see you next time. Peace.